Welcome to Target the Trade. This is Fed Razak, Senior Trading Strategist here at CMTrading. Today, we're going to break down what I call a Grand Slam home run trade. Now, this thing happens once, maybe every 5 years, so you want to see what I'm talking about. But before we start, make sure to like, subscribe, and do share, especially if you find value in this presentation. Okay, so here, and let's go. Let's break it down. So I'm talking about the Japanese yen. But before we get into the Japanese yen, I want to give you some context. Now, Japan is what I call a leading indicator in almost every aspect. Finance, technology, culturally, they have led the way for how the rest of the world follows maybe 5 to 10 years later. Here's an example, okay? About 20 years ago, the Japanese yen was having a very hard time. Why? Because most of the industry was being transferred from making things in Japan and being outsourced to China. This happened about 20 to 25 years ago. And I saw this happening in real time because I was in an industry that was very heavily populated with machinery, and you saw everything just overnight go to China, go to China, go to China. And Japan was faced with a very horrible situation that the value of their economy was going down. And as a result, they had to decrease interest rates. Now, they went from about 5-6% to zero interest rates. That means if you borrowed from the Bank of Japan, you had to pay nothing, okay, which is revolutionary. And then in order to stay competitive with Japan, what did the world do? They also went to zero. That's just one example. And that had had some ripple effects on the markets. Now, Japan has been a leading indicator for a very, very long time, maybe even longer than 25 years as the Industrial Revolution after World War II happened. But for our purposes, okay, right now, they are socially and technology-wise one of the leading indicators in the market. So with that said, we saw a tremendous thing happen over the past 2 months, okay, really less than that. What developed into it and then developed the correctional move that came afterwards. Now, it's two elements. When you're trading the Japanese yen, you also have to take into account their index, which is the Nikkei or the Japan 225. That's a symbol listed on the MT4 trading platform. So let's take a little delve into it. All right. Now, at any given time, when you have a currency, and if it goes in one direction, it has an inverse relationship with its index. Okay. So if the dollar goes up, the Dow Jones goes down. If the Japanese yen, okay, in this case goes down, which means it's getting stronger versus US dollar, well, the Nikkei is also going down. Okay. And that's just the way it works, right? If a dollar could buy me 160 yen before, and now a dollar only buys me 140 yen, it means the yen is getting stronger. Now, historically speaking, the yen was between 90 and 126. For the first time, it broke to new highs about 2 to 3 years ago, and then it just kept on making new highs versus the US dollar, meaning it made new lows versus the US dollar, getting weaker versus the US dollar as it hit 160. And over the past week and a half, we saw it go from 160 down to 140. Now, this is what we call a V formation. It's a tremendous, or a black swan, or you call it even a gray swan, depending how you want to look at it, but it's a tremendous trading opportunity. So even if you miss this part, okay, even if you miss this first sell-off, there's the anticipatory bounce that comes right afterwards. Doesn't only happen in the actual currency, it also happens in the index. And you can compare the two. It's very important to compare the two because they trade in tandem. And when they trade in tandem, that's really where all the stars align, and we're able to actually have more confidence in trading the financial markets because it's all there. All right, so with that said, we've gone from 160 down to 140. Now we're bouncing. Now, there's usually a bounce that is about 50%. What happens afterwards could be many scenarios, but that initial bounce should be about 50%. So our anticipation is that it's going to go back to that 150-ish level, perhaps. Okay, so you got to keep that in mind anytime you're trading it. Now, the Nikkei, obviously one of the largest indices in the world, and it represents all the major corporations in Japan that are listed on the Nikkei. What did it do? Well, it did the same thing, right? It sold off tremendously. But I want to highlight something that's really important. I don't know if you could see it, but this was previous highs. Okay, this was resistance level for the Nikkei. Now, as a result of that, the Nikkei then went orbital, okay, and hit new all-time highs, and then about a month and a half ago, okay, it started selling off. And the sell-off was very subtle, but then it started picking up. And finally, it capitulated and sold off tremendously. Now, if you look, we went back to our previous resistance level and we bounced right off of it. All right, that's really important to note that, because that means that there is a lot of technical trading here. There's a lot of integrated technical trading into the markets. Now, there's usually a 50% bounce, so keep that in mind as well. But this is something that's unfolding, right? Even on the short term, if you could fade it, okay, but on the long term, make sure to actually focus on the trend. And that was, up until now, it was an upwards trend. This does mean that it's changing that. However, keep in mind that there's usually that 50% bounce that comes right after it. So this is still developing, and this is still something to keep on your radar. Thank you for joining me.